from so good evening, everyone. We'll continue from where we stopped. So today we'll be looking at continuation of the aspect of business mathematics. And last week we started the business mathematics, and today we'll continue from where we stopped. So last week was when we checked or when we consider annuity. Today we'll continue from that by looking at cash flow. So I will be sharing the screen with you so that you follow from there. So today we'll be looking at annuity. So we'll be looking at cash flow. So last week we looked at annuity, and today we'll be talking about cash flow. So this aspect of mathematics, there is not much calculation. Thank God you are all business management or related students, so you can easily flow with me. So by way of introduction, cash flow is the movement of money into or out of a business, project, or financial products. So when you are bringing money in or taking money out of a business or a project, is actually what we mean by cash flow. It can even be in your personal account. You are saving, you are withdrawing, you are saving, you are withdrawing. That's what they mean by cash flow. So it's usually measured during a specific limited period of time. So in cash flow, it can be a particular period that one may determine. You want to say, oh, is there any cash flow in this particular business or project or account or financial product? So, and that is what the cash flow is all about. So by means of definition, cash flow can be used, for example, for calculating parameters. It discloses cash movement over the period. So we use cash. So with it, we can determine how cash is being flowed. There are different parameters one can use to determine the cash flow. One of them is what was listed there, said to determine a project rate of return or value. So by the help of cash flow, one can determine the project value, or how much is coming to the account from this particular project. From that, if $10 billion comes into an account from a particular project, one can say, oh, this project values. One can easily determine the value of that project. And depending on the money coming out or being used on that project, one can easily as well determine the value or the worth of the project. So another area where we use cash flow is to determine the problem with a business liquidity. Being profitable does not necessarily mean being liquid. A company can fail because of shortage of cash, even while profitable. So that's another thing. It is expected in cash flow in a business or in a project that money is coming in, money goes out. It is expected, not that at a particular time. Let's say for 6 months, you just have money coming into your account. You are making profit, money is coming into your account, but you are not giving, money is not going out. That is not a good representative of the cash flow. Money must go in and at the same time come out. So that's what the statement is saying, that to determine problem with a business liquidity, being profitable does not, you can be making profit, but that does not mean there is a cash flow in that system. So if money is just coming in and nothing is given out, then you cannot say there is a cash flow in that business. Another one is as an alternative measure of business profit. Through cash flow, one can determine whether a business is making profit or is not. So as an alternative measure of a business profit, when this believe that accurate accounting concept does not represent economic reality, is that a company may be notionally profitable but generating little operational cash, as may be the case for a company that barter its products rather than selling for cash. In such a case, the company may be deriving additional operating cash by issuing shares or raising additional debt finance. So that's another way one can determine through cash flow, one can determine whether a company is making or a business is doing fine or is making profit. Cash flow can be used to evaluate the quality of income generated by accrual accounting. When net income is composed of large non-cash items, it is considered low quality. In this aspect too, we can use cash flow to evaluate the quality of income that is generated in a company by considering the net worth of that company or the net value of that company for a particular period. So we can also use cash flow to evaluate the risk within the financial products. Cash flow can also be used to evaluate the risk within a financial product, whether a financial product is at risk or not. Matching each cash requirement, evaluating the deposit risk, reinvestment requirement, etc. Cash flow notion is based loosely on cash flow statement account standards. It's flexible and it can refer to time interval spanning over past, future. It can refer to a total of all flows involved or a subset of those flows. So cash flow can also be used to evaluate the risk within the financial product. So these and many more are areas where cash flow is being used and where it's been applicable in real life. So they say cash flow, then it can be referred to the total of all flows involved or subsets of those flows. Subset terms include net cash flow, operating cash flow, and free cash flow. As I said earlier, this is more of management discussion than mathematics. So you can see it's all about, in some of your courses you are taking other courses, you see them discussing cash flow as well. It's used to evaluate or determine whether a company or a business is doing fine. So a revenue or expenses stream that changes a cash account over a given period. So one can use cash flow to determine or to study the stream as which a revenue or expenses stream changes an account, a cash account over a given period. And two, an accounting statement called the statement of cash flow, that is, which shows the amount of cash generated and used by a company in a given period. It is calculated by adding non-cash to a net income after tax. Cash flow can be attributed to a specific project or to a business as a whole. Cash flow can be used as an indication of a company financial strength. So through cash flow, company financial strength can be determined. So business cash flow can be used as an indication of a company financial strength. So in business finance, we can use cash flow to determine whether the financial business is doing fine. So the total business finance, one can use cash flow to know or to study the behavior of the business. That the net cash flow of a company over a period is equal to the change in cash balance over this period. That is, once the statement of account is generated, which can be referred to statement of cash flow account that one take from the business. Like one can say, I want to get my statement of account from a particular business, or you go to a bank, you say, get me a statement of account. From that statement of account, you will see how much is coming in, the way money is coming in, and the way money is moving out of the account. And that's what it means by through that one can determine that using the business from business finance. Then operational cash flow will show you how the company is operating. Then in accounting, a measure of amount of cash generated by a company, normal business operating cash flow is important because it indicates whether a company is able to generate sufficient positive cash flow to maintain and grow its operation. In a company where there is operational cash flow, maybe, okay, we are doing business, or we want to buy this material, or we are paying the workers, or money is coming in from what we sold, or from what we invested on. Then from there, that is your operational cash flow. the money will be coming in and you see what is going out from that too. So a good example is given to us how they can operate or study the cash flow through through operational cash flow. Said Ahmed International has a sale of 19,750, cost of 946, 9,460, depreciation expenses of 2,130, and interest expenses of 1,200. If the tax rate is 35%, what is the operating cash flow? So from this, the cash flow said to do that, one would say the EBIT, earning before interest and tax, plus depreciation minus tax, do that, which is calculated here. There's no specific formula to some of this, and that's why I said it's not really mathematics, but more of business study that we do in other courses, and that's what cash flow, and that's what we have been doing. Well, we are going to be looking at. There's no much calculation in this topic. Say cash flow indicator ratio, free cash flow, operating cash flow ratio. Then the free cash flow, operating cash flow measure the relationship between free cash flow and operating cash flow. So this one is this is an indicator to measure the cash flow. The cash flow indicator said is to measure the ratio between the free cash flow and the operating cash flow. All these things are well explained in the notes, which you can compare with some of the other notes you have in your courses. Then this is free cash flow. So the definition is given to us in ratio, that the free cash flow of our operational cash flow, whatsoever that is given to you, that you obtain as your free cash flow, you divide it by the operating cash flow, and that will give you the cash flow indicator ratio. Then we also talk about investment cash flow. In investment, how money is coming in, you invest, what do you get in return from that investment? How is money coming in? How is money going out for that particular investment? And that is investment cash flow. As we all know that the cash flow actually do with how money is coming in or how money is going out. So in investment, an item on the cash flow statement that report the aggregate change in a company cash composition resulting from a gain or loss from investment is the financial market and operating subsidiaries, and changes resulting from amounts spent on investment in capital assets such as plants and equipment. So this is another way to which one can study cash flow, whether a company, through this, one can know whether a company is doing well. Apart from a company having an operating system, they can also have an investment. So is there, if from that investment money is coming in, look at what was invested, look at was the return from that investment, one can determine that, oh, the company is doing fine in area of the cash flow. So that is investment cash flow. Then another one is under the cash flow is where they talk about under the investment cash flow is where we have the flow cash statement, analysis of cash flow from investing activities. Then there also we talk about the talk about introduction to cash flow from investing activities. So this is a simple table, maybe from the cash flow from investment, a capital expenditure, maybe a property, money spent on property and equipment is given for 2012, for 2011, and for 2010, respectively. Then acquisition of franchise, maybe franchise from a restaurant, net of cash. You can see in 2012 there's a return, but 2012 there's a return, 2011 no return, 2010 no return. Then we look at 2012 too. The next one we see the proceeds from sales of properties and equipment, including insurance proceeds. Here we can see that in 2021 there is return as there is investment. And 2011, 2012, 2011, and 2010 there are return from that investment. So, and that is what cash flow is talking about. And here it talks about how do some balance sheets. How do some balance sheet items relate to its cash flow section? So let's take note of some of these things. For some of you that are into business or business study, or you are studying accounting, these are some of the things you come across in what you are being taught. Part of what you are studying is cash flow. So on the balance sheet, one can study and understand what, if there is a good cash flow in an investment. Then here again talks about investor reviewing cash flow statements. Say a firm can get itself into trouble by spending foolishly or acquisition or CapEx to either maintaining or growing its operation. A great guide for CapEx is how it relates to depreciation and amortization, which can be found in cash flow from operations on the cash flow statement. The present statement, this presents an annual charge on past spending that was capitalized on the balance sheet to grow and maintain the business. So this is another way in which cash is being considered. Then we also talk about the financial cash flow. Then in the previous session, we showed that cash flow through a business in 4 generic stages. First, cash is raised from investor or from borrowing through lenders. Second, cash is used to buy assets and build inventory. Third, the assets and inventory enable company operations to generate cash, which pays for expenses and fee and tax before eventually arrive at the first stage. And at this final stage, cash is returned to the lenders and investors. So please take your time. These are much of business related. And this is a good, so these are the category or the stages of cash flow in table. The sale of equity, issue of debt, that is the first stage. And the buying of assets, buying of inventory is the second stage. Then the third stage is the next phase, while the fourth stage is paying operating costs, paying interest on debt, and paying tax, paying dividend and every other things at the fourth stage in cash flow. And the statements you can see reflecting on the other side of the table. So just as I said earlier, this is not mathematics. There's no calculation to say in it. So, but you can read and digest as much as possible, for it to be more readable, because you are a management student or commercial student. So, which cash flow measure is the best? So they are talking about so that we have different types of cash flow. Then, which of them is the best? Then you have at least 3 valid cash flow measures to choose from. So you have at least 3 valid cash flow measures to choose from. Which one is suitable? Which one is suitable? So the easier choice is to pull cash from operations directly from the statement of cash flow. This is probably measured, but it has weaknesses. It has weaknesses when used in isolation. So he's talking about the CFO that has weaknesses when it's being used in isolation. So of the 3, none of the 3 measures of cash flow, none of the three can be, none of all the three have weaknesses, because at times you need to combine one or two together in order to determine the cash flow. Then another thing is how to manage the cash flow. Cash is king when it comes to financial management of a growing company. The lag between the time you have to pay your supply and employees and the time you collect from your customer is the problem. And the solution is cash flow management. At this simplest, cash flow management means delaying outlays of cash as long as possible, while encouraging anyone who owe you money to pay it rapidly as possible. So in cash flow, as you know, money is expected to go in and money is expected to go out. But at all time, this must be a continuous thing, not that money will stop coming in and what you see is that you are spending out for a long period. That's not a good cash flow. And in a cash flow too, money, you must not just be collecting without spending out. It's expected that you take in and you give out. And that's a good representation representation of what cash flow is all about. Here is talk about the measuring cash flow. Then preparing cash flow projections. Prepare cash flow projection for next year, that is next quarter, and if you are on shaking ground next week, an accurate cash flow project can allow you to travel well before it strikes. So please understand cash flow plan and not jump into the future. So you have to understand how cash flow works before you can say, you know what it is. That what cash flow is all about, you must understand. But the basic thing is money is coming in and money is going out. But in the way money is going in, money is going out, there is a measure that must put in place, any other condition that you must consider before you can know that, yeah, this company is doing fine in terms of cash flow. A company can be making profits, but when the cash flow, it can be making profit, but at times if the cash flow system is not proper, then the company is still not doing fine in terms of cash flow. So just as I said, this is more of what is close to your area of specialization that you can read and understand very well. There's no calculation to say in this topic. Then another thing is improving the receivable. That is, you improve the way you receive money. If you got paid for sales, the instant you made them, you will never have a cash flow problem. Then if you got paid for sales, the instant you made them, then you will never have a cash flow problem. Unfortunately, that does not happen. But you can still improve your cash flow by managing your receivable. The basic idea is to improve the speed in which you return material and supplies into products, inventory into receivable, and receivable into cash. Here are specific techniques for doing this. So these are specific techniques of improving your receivable. Offer discount to customers who pay their bill rapidly. That is, if you want money to come in on time, you can say you have given a discount to customers so that they can pay in on time. Ask customers to make deposit payments at the time orders are taken. So that's another way. Before you can give them any product, you allow them to make some payments before they can, so that there can be cash flow into the business. Require credit check on all new non-cash customer. That's another way. You are expected to do a recheck on your credit on non-cash customer. Then get rid of old, outdated inventory for whatever you can get. That's another way. If you invoice promptly and follow up immediately, payment are slow in coming. So these are ways of measuring your reversibility. Track accounts reversible to identify and avoid slow paying customers institute or policy or cash delivery. It's an alternative to refusing to do business with slow paying customer. Then another thing is managing your payability. You yourself, apart from you managing the way the money that you receive, you encourage people to pay on time. You too, you must be on top when it comes to paying, managing your payability. If anything you bought and you need to pay for, you must make sure you do that on time. So say managing payables. Top line sales growth can see a lot of problems sometimes too well. When you are managing a growing company, you have to watch expenses carefully. Don't be lulled into complacency by simply expanding sales. Anytime and any place you see expenses growing faster than sales, examine costs carefully to find place to cut or control them. Here are some more tips for using cash wisely. So this is talking about payable, managing your payable. So these are techniques of managing. Say take full advantage of creditor payment terms. Use electronic fund transfer to make payment. Communicate with your suppliers so they know your financial situations. Carefully consider vendors offers of discount for earlier payments. Don't always focus on the lowest price when choosing suppliers. Sometimes more flexible payment terms can improve your cash flow more than a bargain basement price. So surviving short form. So how you can survive a short form, maybe the money that is coming in short or the money that is going out is not well, it's not encouraging, it's not well dispensed. So how you can survive the short form? Sooner or later, you will foresee or find yourself in a situation where you lack the cash to pay your bills. This does not mean you are a failure when you don't have money to pay your bill. That does not mean you are a failure. As a business person, you are a normal entrepreneur who cannot perfectly predict the futures. And they are normal everyday business practice that can help you manage the shortfall. So here we are looking at how you can manage the shortfall. So when you have shortfall in business, that does not mean you are a failure and does not mean that you are not doing fine. It can happen at any time in business that you need some certain amount of money to do some things, to do a business or to carry out a transaction, but you just discover that you don't have the sufficient amount to do so. So, and that is how, so going through this will tell you how you can manage your short form. So here we are talking about financial statement, cash flow computation, direct method, and then in cash flow computation, there is two ways to either you use direct method or indirect method. The direct method is preferred by most firms because it shows a reconciliation from report net income to cash provided by operation. And this, so I want to run through so that we can just have a little interaction time before we close, because I have less than 5 minutes to go based on the time that the team just released to me. So this and many more you can see in the note. Please endeavor to go through it carefully. It does not involve much calculation. It's not of mathematics to say, but understanding the concept of cash flow and how it works. Then in conclusion, the theoretical case for CTF versus cash flow is clear. It is similar than an income tax with lower income costs. It can be made progressively, thus satisfying equity criteria for good tax design. So, sorry. So that is that on that area. is not of rigorous mathematics, but you may need to go through it to understand many things from the business perspective. Are you getting that? Please, you can unmute yourself so that we talk if you have anything to say. But when we get to it's not really mathematics. That's why you don't see me writing anything on the board. I will have used the board to write. But when we get to where it involves mathematics, I will definitely write something on the board so that you can see. So you can talk if you have anything to say, but the note is with you. If you don't have a copy, just go online to download for your use, then read accordingly. So you can speak.
Good afternoon, sir.
Yeah, good afternoon, Rafiat.
Yes, sir. So please explain what is this CAPES? CAPES.
CAPES. Where did you see CAPES?
Yes. In the cash flow, this thing is there is a word there, CAPES. CAPEX. Yes, sir. PES. CAPEX. X.
Okay. Except I check the dictionary meaning, I can't really say. Some of these things you may check in the dictionary to understand. I don't. CAPES. S as in or X.
CAPEX. X.
Okay. Let me get the business meaning so that I don't just say things. I'm trying to check the record. Any other question apart from that? Say capital expenditure. Yes. Mean capital expenditure.
Capital expenditure.
Yes.
Okay. Yes, please, this inventory.
Or capital expenses.
Okay. Capital expenditure.
Some of those things you can check dictionary, it will show you the meaning.
Okay.
Yeah.
Yes, sir. So this inventory, is it only maybe the goods that is in the goods in the store, maybe the goods that you are going to turn into consumable, or both the cash, or both what is maybe the remaining sales?
It has nothing to do with cash. It has to do with the items, goods, machineries, material.
Okay.
Inventory, you take inventory when you are taking account, taking record of what you have, but when you are taking record, you are only taking record of physical things.
Okay.
Yes.
Okay.
That is inventory. It has to do with items, goods, machineries, material held by a business or selling in the market to earn income.
Okay. Yes, this you explain of the cash flow is the process of maybe transaction going out and coming in. And you still say that maybe in the process what about in the process where just cash is coming in? What do we call that? And there is no one going out.
Yes, we see is in cash flow. That is not a cash flow. A cash flow you are expected. No, at times when you go to bank, they say when you have money in your account, you are just paying. You know, when you are paying, your account can be dormant and you still be paying, but you cannot receive. Are you getting it? So in cash flow, you must the account must be active. You are expected to be putting in and bringing out. But it must not be one way. It must not be one way. It can happen, but it must be within a limited time.
Okay. Yes, sir. Okay. Thank you, sir.
So you are welcome. I will soon be logged out of this thing, but if anybody, is there any question again? So just as I said, this course has the topic has nothing to do with much calculation. That's why I'm not taking pen to write. Otherwise, you can see Paul behind me. We started the class. By the time we get to where we need to write that involve mathematics, you see me coming on board to write and to solve problems, mathematics. So But for now, we are this business and the thing you can still read. Anyone you don't have the understanding of what he's saying, please check dictionary for some meaning. Once you can get dictionary meaning or some, you go through the Google, just check your Google and say what the meaning. It will bring it out, and you have from there you can have a better understanding of what it's saying. Even go to Google, just type cash flow. It will give you, and you have a good understanding of what cash flow is all about.
Thank you, sir.
So, in the absence of questions, or is there any other person with question? But just take your time, read through. Thank God you are management student to say. And these are some of the things you take in other courses too. In other courses you are doing, they may be mentioning in cash flow and things like that. But one thing that is important in cash flow, that money must be coming in or going out. It must not be one way. And at times you can be making profit. Money can be coming in and you are making profit. If it's not going out, that is not a good system. And there's no cash flow. For cash flow to exist, money must be going out and money must be coming in. But that does not mean that one should be spending recklessly because you just want, you still have to manage what goes out and manage what comes in at all times, so that you don't run into debt or you don't run into wrong business. So in cash flow, you can have a cash flow in investment, in financial. So cash flow can be anything. You can even buy, you can have a company, you buy equity here, you do this, you buy assets here, street business, as you have other things you are operating, money comes in, you spend your money on this, you pay salary on this and things like that, and a good way to record a proper cash flow in a financial system. So in the absence of question, please just take the class as it is. By next week, we are going to have we still continue. Next week, we are going to be looking at seeking fund, which is also an aspect of business mathematics. If you have your time,